Welcome. In this video, will ZBCN coin go ATH again? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structures on the chart is the well-established upward trend. This trend line shows that the price is moving upward in a disciplined manner and that the overall market sentiment is shaping positively. Upward trend lines generally represent market confidence, indicating that buyers dominate the market and step in during each correction to push the price to higher levels. The fact that the price has now touched this upward trend line suggests we are at a technically critical point. Historically, such touches have often been strong reaction points and have typically laid the foundation for new bullish waves. When we examine past price movements from this level, it is clearly seen that each touch of the trend line has been followed by an upward move with momentum. This shows that investors consider this trend line an important support level and have confidence in it. Therefore, the current touch could similarly signal a strong upward move. This is because in technical analysis, it is well known that trend lines are vital in determining the direction of an asset's price, and holding above such supports fosters a positive outlook. Additionally, the recent increase in volume following the latest touch on the trend line is also noteworthy. At such critical technical levels, rising volume often indicates that buyers are regaining strength. Volume-supported rallies are not just temporary movements. Rather, they often signal the start of strong and sustainable trends. If this continues, it is highly likely that the price will gain strength from the current level and move toward higher highs. On the other hand, the structural integrity of the upward trend also appears quite solid. This trend line has been confirmed by several points and has worked consistently. Each touch point has created a bottom area, and the rallies from these areas have led the price to higher peaks. This shows that the market is progressing in a stable and reliable manner, while also indicating that investor psychology is shaping positively. Especially for technical traders, such trend structures are closely monitored, and each touch of the trend line is viewed as a potential buying opportunity. In addition, the timing of this touch may also be significant. As often seen in markets, reactions from technical levels tend to be stronger and more decisive during certain time frames, such as the beginning of a new week or month. These periods are when investors review their positions and refresh their strategies. Therefore, the potential buying pressure that may arise as the price touches the upward trend line could be the beginning of a larger bullish move. Other technical support levels just below the upward trend line also reinforce this scenario. For example, if a previously established horizontal resistance now acts as support and coincides with the trend line, this area becomes a much stronger support zone. Such technical confluences increase the likelihood of an upward bounce and generate positive signals for technical traders. From a psychological perspective, this level is also quite important, because the upward trend line often acts as a confidence line for investors. As long as the price does not stay below this level for an extended period, market sentiment remains positive. Investors see these types of levels as a sort of buyback zone. Strong reactions from this level indicate that confidence in the market remains intact and that the long-term upward trend is continuing. But we can't make a decision based solely on trends. Let's also take a look at the other metrics. Stay tuned. When we carefully examine the chart, we observe the formation process of an inverse head and shoulders (IH and S) pattern, which is known in technical analysis as a strong and reliable reversal formation. This pattern typically appears toward the end of downtrends and is regarded as a classic signal of a potential trend reversal. Currently, we can see that this formation is gradually taking shape, and that price movements are technically supporting this structure. Moreover, the current stage of the formation corresponds to the head portion, which is the most defining and powerful part of the pattern. This is a highly positive indication that the price may be preparing for a significant reversal. Inverse head and shoulders formations are among the most accurate reflections of investor psychology and market structure. This pattern shows that after a certain downtrend, buyers are gradually gaining strength while selling pressure is weakening. The first shoulder area indicates that sellers are still active in the market, but no longer as dominant. The subsequent head area drives the price to a lower level. But this decline is not sustainable in the long term, and the buying volume observed at this stage indicates that buyers are entering the market more forcefully. The fact that the price is currently forming the head area clearly shows that buyers are gaining influence, and that we are in the preparatory phase of a major reversal. The formation of the head area is a technical indication that the pattern is maturing. This zone typically exhibits gradually increasing volume and strong buying reactions, despite the price decline. If the price begins to move upward after completing this section and starts forming the second shoulder, then the pattern will be on its way to completion. This development can present a significant window of opportunity for investors. Once the formation is complete and the neckline is broken to the upside, the target price movement according to technical analysis is typically equal to the depth from the head to the neckline. This provides investors with a clear and reliable target level. One of the most important aspects to watch in such IH and S formations is volume behavior. Volume usually increases during the head, decreases slightly during the shoulders, and then surges again as the neckline is broken. The fact that the price is currently forming the head and that volume is increasing supports the idea that the pattern is developing in a healthy manner and holds technical validity. This rise in volume indicates that buyers are becoming significantly more active, further increasing the likelihood of an upward breakout. Moreover, when we consider the overall market structure and trend dynamics, it appears that this IH and S formation could signal a broader trend reversal. Following a prolonged downtrend, this pattern provides a strong technical signal that the price may begin an upward correction or even a new bullish trend. Therefore, if the structure completes, not only short-term but also medium and long-term price movements could gain upward momentum. The level at which the IH and S formation is occurring is also quite significant. If this pattern is forming around a key support zone, which the chart may be indicating, then the reliability and success potential of the formation increase even more. From a technical standpoint, when such formations appear at support levels, buyer interest tends to increase and stop-loss areas become more clearly defined. This allows investors to take more secure and confident positions. The fact that the head section is currently forming represents the deepest and most powerful part of the pattern. This stage indicates that the price is attempting to recover and form higher lows, and that the market structure is beginning to shift in an upward direction. When the chart is carefully examined, a notable pattern can be observed in the ATR indicator. ATR is an important technical analysis tool that measures price volatility and shows us how active the market is. Currently, the declining ATR values over a period of time indicate that market volatility has decreased, meaning price movements are occurring within a narrower range. However, this decline may also signal that a significant movement in the market could be approaching after a prolonged period of compression. From a technical analysis perspective, while a falling ATR indicates a quiet market, this is often a common precursor to the beginning of a new and strong trend. In other words, the current low ATR may be interpreted as a preparatory phase for a major upcoming price movement. Low ATR levels generally suggest reduced uncertainty in the market, with participants moving into a wait-and-see mode, leading to limited trading volumes. However, in technical analysis, this situation is often seen as the calm before the storm. As observed many times in the past, sudden upward or downward movements can occur following periods of low ATR. In this context, if the ATR starts moving upward again, it not only signals increasing volatility, but also indicates the potential for the market to shift into a new trend. And if this increased volatility aligns with upward price movement, overall market sentiment can turn significantly positive. We should keep checking on the ATR from time to time. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.